Thank you very much for attending our annual results announcement. As you know, we're changing the format a little bit. We usually have the management sitting over here. And I think because they're all going to have to face you for about an hour, and you have to see their facial expressions, so they decided it's much more comfortable sitting down there. But the truth is we just have too many senior management, so I decided that everybody can comfortably sit down. So whoever is going to speak, whoever is going to answer questions will come up here. Otherwise, we will begin. Okay. I will have a very quick intro, and then our CFO will give you, a quick overview of the financials, and I will come back and talk a little bit about strategy, but I will open up for Q&A a lot earlier than usual. Just very quickly on the highlight. 2015 is a very big year for Hong Kong Exchange. We have a record-breaking revenue and record-breaking, profit after tax, and up respectively 36% and 54% respectively. This is also a year it's a full-year record for ADT and ADV in cash and derivative markets, largely driven by market sentiment and supported by the Stock Connect program. And this is obviously very much aligned in line with a very major market movement in China. And in terms of our traditional business in the IPO fund raised, we are again back on top, global number one in IPO fund raised, up 13% year over year. And this is the record fundraising year, for us. This is also a year that we successfully commercialized LME, and with the full fee, trading fee significantly increased, and then operated for the entire year. This is also the first year we have LME Clear operating completely, for a full year for the first time. And we have prepared, and we are now setting all the preparations down to launch further China Connect programs. And we're just ready, and to be prepared and pending regulatory approval. And lastly, we announced the next 3-year strategic plan. There are a lot of components in that plan, and some of which I'm sure we're going to cover today. And but this is going to be the beginning of another year, another 3-year cycle. And obviously this year is nothing like last year so far, and so it's going to be very interesting. So I'm going to ask Paul to focus a little bit on the last year first, because it is very hard to find a year to feel so good about ourselves, about yourselves, about the market, about everything. Right now, it's not one of those times, but today is one of the better times, and Hang Seng Index, has not get up above 20,000 for quite a while. So very glad to see that we're finally touching it, just a little bit above it, and close the market at 20,003 points. So very happy today. And it's a good day for us to announce the results, and hopefully the rest of the year, will be better. Thank you very much, Paul. Yeah.
Thank you, Charles. I think most of what I was going to say, Charles has already said. So it's a fantastic year. It's great to be standing up here announcing profits at a record level of nearly 8 billion. The key thing, I think, to focus on here is most of the underlying reasons for that increase this year were already known. We announced the third quarter results a little while ago. All the growth factors that have contributed to that 8 billion were there. The fourth quarter, turnover was down. ADT was down 30%. Third quarter was inflated by things like Worldwide House, but basically no surprises. So in the results, you shouldn't be surprised by the numbers, and in fact the consensus forecast of analysts is pretty much spot on, so well done, guys. Here are the numbers. Revenue's up by 3.5 billion, so incredible growth, and it comes from 3 main areas. The first is obviously the turnover-related activity in Hong Kong. That's the trading activity, it's the clearing activity, it's the custodian nominee services activity, and that's about $2 billion worth. So of that 3.5 billion, 2 billion comes from Hong Kong-related activity on the market, so that uplift generated that income. About $1 billion comes from new money from LME. That's both from the commercialization of LME's trading fees, which happened from the 1st of January, and also a full year of profits from LME Clear, which contributed an additional 600 million this year. So a strong performance from LME this year, fully commercialized, firing on all cylinders, and it's added about $1 billion to our revenue. We've had a number of one-off items, principally the sale of our property at Worldwide House, added about 450 million. A few other bits and pieces, some interest on the Lehman's debt that we had outstanding. So another $500 million from those sources. So overall, three main sources of growth. Hong Kong, 2 billion, LME, 1 billion, one-offs, $500 million. As we look across the page, operating expenses up 11%, and I'll talk a little bit about that later on. That is slightly lower than we thought it would come in at, so we're quite pleased with that number, notwithstanding the fact it's double-digit growth. And then the other point, which I make each time I stand up here, is that all of that growth has flowed straight across the page to the right-hand side. 90% of that will be paid out to our shareholders, and our dividend this year goes up from 3.98 last year to 5.95 this year, a final dividend of $2.87. So hopefully that will be a reward for our shareholders. Looking at the next page, performance by operating segment. I won't dwell on this. I think it's fairly obvious that with the income growth, the EBITDA margin is going to go up. Looking at the right-hand side, 75% EBITDA margin, really a record margin here. I can't say that we expect that to be sustained. Going forward, we expect to come much more back to a cost-to-income ratio of around 30%. But it will vary up and down, obviously, with market volumes. Looking at the next slide, operating expenses. Staff costs have gone up by a lot. That is due partly to the fact that we launched a new business last year. The LME Clear headcount was coming on stream. It's partly due to the fact we're investing in our strategy. We're investing in people. There is some headcount growth during last year. There's also some salary increment that goes in there. Very much something that's important to the continuation of our strategy. We had pretty flat costs in the IT space and in the premises space. We managed to hold down costs in premises through a restructuring of some of our premises. We have a new initiative to try and consolidate our premises. And in the IT space, the savings that have come through from the LME Clear insourcing of IT resources, around over 100 people that used to be outsourced are now insourced, have kept costs down in that area. In the legal and professional fees, fees are down significantly. That is partly due to around $48 million less expenditure on litigation costs. That's with the litigation in the US, in particular the warehouse litigation, coming, if not to a final close, then near close. And also, as we go across further to the right-hand side, small increase in operating expenses and depreciation and amortization pretty flat. I put in a slide, a new slide this year, which I will try and get up if I can. Can I have some technology help? Okay. This slide. I wanted to highlight the 2015 results in the context of the trend of results over the last couple of years. And I've just put 2 years in here because clearly I think everyone understands we had a massive bull run in the second quarter, came off in the third quarter, and we've come down again in the fourth quarter. But what's happened is we've returned essentially to where we were at the end of 2014. So if you line up the fourth quarter 2015 with the fourth quarter 2014, you get a sense of déjà vu. They are very, very similar. Now, we've had some additional income from LME in the fourth quarter of 2015, so they're not identical, but if you line them up side by side, they look very similar. So what's happening is we've returned to that normal trend line. That's not to say we don't believe that we will get back to the types of volumes we saw in the summer. We do. That's what our strategy is aiming for. But for the time being, we're back down to that sort of 2014 level. And if you look at year-to-date ATD in 2016, it's 74 billion. The average for 2014 was 69.5. So we're still running ahead of that, and as Charles alluded to, today is a great day, 90-odd billion turnover, so hopefully that's some green shoots showing through. If we look at our balance sheet, we have a much stronger balance sheet than we did a year ago. That profit that we earned this year has helped shore up that balance sheet, but so has some structural things we've done. We've redeemed our convertible bond. That's $3.5 billion of debt that's now off our balance sheet. We've got $5 billion more of corporate funds. And our equity, our shareholders' equity, has gone up by $8 billion. So our balance sheet is looking much stronger. Not that it was weak before, but it is a very, very strong balance sheet. I'll now hand back to Charles to talk about strategy. Thank you.
Okay. I don't think I will spend a lot of time going over the strategy because many of you have heard it before. We had the annual media event, and then we also had an analyst briefing on our strategy. So I will only just be very quickly going over some of the key highlights, but more importantly, to open up for questions so that we can focus on things that are of your specific concern. Our strategy essentially continued to be looking at the positioning of Hong Kong and Hong Kong Exchange. And we wanted to develop the three asset classes, and each of them trying to connecting different pieces together. In our equity piece, we continue to bring the China companies listing here, international investors here, but more and more we're trying to look beyond that. We look at reform, we look at connecting more. We look at connecting different kind of people. We used to connect international investors with China companies in Hong Kong, and in the future we would like to be able to connect investors directly to China, maybe directly connecting international companies to Chinese investors through Primary Connect. So we are really looking at very different dimensions of the various connect concept. And when China is very strong, when the market sentiment is very strong, we obviously want to connect on the things that are immediately available. When they are not, that strong, we are now going into some of the structure issues and structure channels to build the connectivity. In commodity, we talked about it earlier, about really two big directions. For LME, which is largely a physical-driven market, OTC market, used largely by physical users and actual real economic users, and not us, but much by financial speculators. We would like to bring a greater level of financial participation in LME through a Project Silk, which is the London Connect. And whether or not we do a full connect or whether we do a partial connect is all something that we are looking at. We're evaluating the pros and cons, the risk and reward of that. But probably the most unconventional things that we will be doing, that we'll be talking to you a lot more into the future, is what we are going to be doing inside China. What we call this word, grammatically is not the right words, but conceptually is trying to physicalizing China. Because China's commodity market is top-heavy, very heavy speculatively driven trading, very little real physical users. And we wanted to fill that gap, and that will allow us to build a massive benchmark on physical spot trading, and that benchmark will allow us to futurize or allow us to otherwise, and take the value out of that effort. So essentially, if you want to think in equity terms, equity, we have companies coming to Hong Kong to list. And then you have a secondary market to trade. And then you have index futures and other derivatives on top of it. Commodity market is largely a futures market. But futures market usually is based on something. And today, our commodity strategy is to go into China to open and create an IPO market of commodities. Because the commodities are not going to come to Hong Kong on their own. Unlike companies which can. They're humans. Commodities are goods. They're not going to be able to come on their own. So we need to go there to create a physical market, almost like a cash market. And then there will be enough trading by people there through forwards, through various parts of it, financing, And then on top of it, over time, we will do futures, whether we do it inside China, whether we do it here, or whether we do some sort of a hybrid is remain to be seen into the future. We're obviously also moving into a number of other areas like FIC. We're building a bond connect, exploring the building of a bond connect so that we can begin to get into the fixed income business. So on the Hong Kong-based FIC, we will be launching a whole range of products. The point of all that is to create a critical mass of cluster of products, particularly evolving around renminbi. So we have a renminbi dollar contract, a dollar renminbi contract today. We will be launching a renminbi dollar contract. It's basically today our contract is dollar renminbi. P&L are settled in dollars. In renminbi. Margins are funded in renminbi. We will potentially also launch a product. We actually price it and settles the P&L in dollars, and so that the margins can be paid in dollars. So they are the flip of the current currency contract. And then we are also offering a few pairs with yen, with euro, with rupiah, and also there's one more Malaysian rigging, Aussie as well. We are also potentially in the second half considering offering a physically settled gold contracts in renminbi and dollar in one pair. All of this is going to create what we consider to be a critical mass of clusters of pairings and currency futures contracts that will allow a variety of different users who have a variety of needs to come to trade, and their differences in between of them will very quickly be able to be arbitraged by speculators and other investors. So this is likely going to really accelerate. So if you think about the original currency futures contract is, one piece of wood in this fire. We're now putting a variety of different kind of wood. So when the fire do eventually catch up, it's going to be a pretty significant fire and that will sustain. And we have a whole range of market infrastructure and platform initiatives. I'm not going to go through each one of them. You can ask me if you are particularly interested in any one of them. This is the continuation of enhancing our market to make it continue to be competitive, continue to be on the cutting edge, and continue to be able to solve problems. And we're doing a lot of this. Historically, we used to be focusing on the EPs only. Now we're increasingly looking at the needs of our end customers, which are the buy side, and that will allow us to really, and also that also give us the tremendous amount of feedback so that we begin to launch a lot of product that we believe that will be actively taken up by our investor base. With that, I will open up for questions. I think we're going to take turns. Scott is going to manage that.
We'll go back and forth, as Charles said, analysts and then reporters. Just very quickly, we will do these questions in English, Mandarin, or Cantonese. But to do that, we need simultaneous interpretation, so we need you to help us by waiting for the mic, telling us your name, and then putting the question. So without further ado, let's start over here with Mr. York Poon.
Thank you very much. This is York Poon from HSBC. Firstly, I'd like to congratulate for the strong earnings growth last year. I do have 3 questions. One strategic, 2 financial.
Can you cut it into 2?
Okay, 2 then. 1 financial and then 1 strategic. There are a lot of good things in your strategic plan. But if we can, narrow the time frame a little bit. In the coming few months, what are we most likely to hear from you? That's the first question. And then the second question is, we noticed, the tax rate was particularly low in the fourth quarter last year. I know there are some of tax credits here, but what's the likely guidance in the coming, in the going forward? I thought the LME tax rate is much higher than Hong Kong here. Thank you.
Okay. I will get Paul to answer that tax question later. And just very quickly, I think the strategy, you said next 2 months. I don't look at things next 2 months. And also, if there is something that I know in the next 2 months I have to do, I either have to make an announcement or I have to do it quietly. Either way, I probably shouldn't be talking about it. Not trying to be cute. Let me just think what are the things. I don't think anything big is going to come in the next 2 months. we're making, very, lots of efforts on a lot of things. And also, we're not really, obviously, if the regulator deliver approval on Shenzhen Connect, and that can come anytime. They can come tomorrow. They can come 2 months from now. They can come, 6 months from now. I don't really know. I don't have anything else that I can really talk about that we will be able to deliver in the next 2 months. But I think in the next 2 months, the different pairings of renminbi contracts, probably we're hoping by the end of the 2 months, we will be able to hear from the regulators as to whether or not it's a go or not. And that will be sort of the right time frame. Thank you.
Go over to the media side. Maybe the gentleman here in the black sweater. I'm sorry. Exactly, Paul. I apologize. Yes, taxes.
I would suggest the tax question is probably a small segment of the population here, and I would suggest that come to Paul after the presentation if you're interested in that tax question. I'm sure he will answer it. There are a lot of us others probably, tax is not on their top of their mind right now.
The gentleman here, I think is a reporter with a sweater.
Good afternoon. I'm Liang Qianyou from Hong Kong Finance. This is the first time, I'm seeing you that, you have given us a talk on the third board, and on the third board, the CSRC has already said that, at the moment it would be built on the alternative boards model and see if there is room for the third board. And you've said that you feel that, there are not many obstacles in terms of setting up the third board. So do you think, there is any difficulties on this? And second, you have mentioned, currently in the mainland China, people are very concerned about the money leaving China issue. And could I please ask, we could carry out the outbound investment first. Well, that's very, very good question. So with regard to your first question, some media, they have said, CSRC is disagreeing with the Hong Kong exchange, etc. I would like to clarify, CSIC, they are a big boss. We are a small boss. So absolutely, we listen to the CSRC. So if there's any disagreement, then we will always be referring to what the CSRC statement is. So what are we trying to say, in the media event, we have said it very clearly, on one hand, whether, we need to review the GEM system and see if we can make further improvement. And then we have said possibly we could make the, come up with a third board plan. What we are saying, if we can carry out reform on the stock, on the current, stocking volume, if people feel that GEM is not perfect yet, there is still room for improvement. Of course, it would be appropriate to carry out such improvement on the basis of GEM. Well, what we are carrying out this discussion is about, why are we carrying out reform? Overall speaking, this is a very successful market. We have over 1,000 successful companies listed on our market, but same as other markets, there are still room. There's still room for further improvement. So some of the good companies, for example, good companies, innovative companies have trouble getting into the market. And another issue is that some people criticize for the not so good companies, it is difficult for them to leave. So when we are thinking about reform, first, how do we prevent bad companies? Of course, we improve our standard. Well, if we have very high standard, which also means that good companies would also find it difficult to enter. Well, how high do you build this wall? some companies, they might have met the standard when they IPO'd, and after that, their standard will slip. So if you keep improving the standard, it's not a final solution to the problem. The reforms idea is that, we can bring in more innovative atmosphere into the market. So what I'm trying to say is that, when we are letting everything in, we also need to look at what needs to exit. Some of the stocks, they have been performing very poorly for a long time. Some people call them the vampire stocks or whatever. So those stocks, if they shouldn't really exist in the market, well, then we need to have an exit mechanism. But, then again, this is a community in Hong Kong. It is not so easy to just establish this. We need to achieve consensus. We have tried this in the past. There are risks involved. If we're all willing to do so, if we all have the same idea, we believe this is the right, then we'll go ahead. If the common consensus is that this is very risky, and if you feel the incremental volume is better, and which will gradually influence the current situation, this is also another way to go about the issue. So whichever we are going to choose, we need to brainstorm. But eventually, of course, CSIC has the final say. For us, we'll be listening to the regulators. The other question is on the new Stock Connect, for inbound investing outside and on the outside investing in China. I don't think that there is anything better than this, the Chinese issue, the Chinese concern on the money leaving China issue. When we're talking about domestic China investing outside of China through Stock Connect, this is in a very controlled fashion. This is very well managed, and this is a message that the Chinese citizens, this is the trend for the Chinese citizens' investment going forward. If we're going to carry this out in the fashion of Shanghai Hong Kong Stock Connect, I believe that this can be controlled, and after they sell the stocks, the money would return back to China. So especially in this backdrop, I think it really has reflected the safety of Shanghai Hong Kong Stock Connect. Well, of course, it doesn't mean that we need to carry out both ways at the same time.
下面呢，我们还有一个分析师呢，通过网上来提问，他是管理，他问的呢。
Extremely low in the fourth quarter of 2015. Any guidance on LME's clearing fees for 2016 earnings?
Do you guys want to take some time and then come back later for me to handle another question, or you want to do it now? Come up. Yeah. Look here.
For every $100 that LME earns in trading revenue, it earns $40 in clearing revenue. And as you saw from the ADT graphs that Charles showed earlier, the commodity volumes are very similar. A reasonable first quarter, very good second and third, and a very poor fourth quarter as commodity markets around the world went down and volumes declined. So it's a very simple answer, is that volumes declined in the fourth quarter, and the clearing revenues are tied directly to the trading volumes and the trading revenues. So there's nothing particularly to analyse in that regard. It's simply directly linked to the volume. And as I say, I repeat, for every 100 in trading revenue, it's 40 in clearing revenue. So there is no other or special answer to that.
Thank you.
Okay, let's from now on just do one question per person. We've said this before. If there's more than one, Charles can pick the one he likes best and ignore the other ones. Okay. Media, our friend Gregor in the blue shirt, gray jacket, second row.
Thanks very much. Gregor from Wall Street Journal here. What do you make of the recently proposed merger between the LSE Group and Deutsche Börse? And do you see any openings there for HKEX as well?
Yeah, it is a very major transaction in our space. And if this merger does take place, obviously you have a pan-European exchange powerhouse emerging on the horizon. So we're watching it very closely, and I do not want it to comment beyond that. But don't take that as a saying, oh, maybe they're doing something, that's why you couldn't talk about it. And I'm not saying we're doing something. I'm not saying we're not doing something. We're simply saying we're not commenting on something that is pretty big and it's pretty important for the industry. It may or may not have a lot of impact on us, and clearly does not have very limited impact in our time zone. But in our London time zone, obviously, is a pretty major event, and we're watching it very closely, and we'll be maintaining a lot of conversations so that we stay on top of the game.
Back to the analyst side, maybe the lady here in the white blouse in the second row.
Thanks, Charles. I have a question. This is Sarah from CICC. I have a question regarding the Shanghai-Hong Kong Stock Connect. So last year in 2014, we have around 68 million income from it, and this is $200. But consider that this is a full-year operation, and also the ADT of the northbound and southbound increased year on year. So can you share a bit more on the fee schedule of this Stock Connect? Because it seems 68 million to 200 million is not corresponding to the operating time and ADT. Thanks.
Romy, you want to answer that?
I think Stock Connect was launched in November 17, 2014. And in the calendar year, even though it was only operating for a little over a month, there were some non-recurring revenues coming out of Stock Connect, mainly relating to connection fees and one-time revenue for people to hook up in Hong Kong. And then in 2015, I think it's pretty easy to correlate the revenue to the volumes. The one change was in August, Shanghai Stock Exchange and China Clear dropped their fees, both on the trading fee and the clearing fee. And so that meant that our revenue sharing portion of those fees dropped as well. We get 50% of the northbound fees. And so therefore, the 200 million compared to the 68, first the 68 includes some non-recurring items. So I forget the exact number, I'm not sure it's disclosed, but let's say half of it was non-recurring. And then the 200 in the last 4 or 5 months of the year was a bit lower in terms of the way that we make money. But again, the fees are public, and so this year it'll be driven by volume, and probably on the fee schedule will be lower than last year for northbound. Thank you.
Okay, I think we're back to the reporter side. Maybe the front row, Enoch, South China, in the tan jacket.
Hi, Charles. Thank you very much. And Enoch from South China Morning Post. I want to raise a question about the fourth quarter result. Actually, drop price substantially from the third quarter. And we also see the turnover in the past 2 months is not really good. So do you think that maybe the declining trend will be one of your major challenges? And how do you think you can cope with that?
Well, we are clearly seeing some difficult times in our industry. Started from the last quarter, and from what we can see for the first quarter, that trend continues. Whether that will continue to dominate the theme this year, I don't really know. We're not in the business of forecasting ADTs, but it's pretty safe to conclude, and you don't need me to do that, is that this year is not going to be like last year. And that's probably an understatement. How much worse this year is going to be over last year, I don't really know. But, last year is the record. And hopefully this year is not as bad as it's currently looking. But, everything is related to the broader macroeconomic development and also China. I don't think I told you anything that is meaningfully useful. But, yeah.
Back to the analyst side. Any questions here in the Analyst section, yes. The gentleman here, I think, in the second row with the dark jacket.
Thank you very much. I have been involved in investing in Hong Kong for 10 years. I thank Hong Kong Exchange for adopting all these measures to help investors. I don't think that you have achieved very promising results, and we're also worried about the long-term implications for the gap between the trading volumes. Well, what is the reason between for this disparity? What are some the measures that you can take to reduce the pricing disparity between the North and South markets? Second question is about regulation. For instance, there are some stocks which went into serious problems. For instance, Hanergy. I think it's necessary for you to step up your regulation over the listed markets. For instance, Hanergy is a very good case in point. We are a bit worried about this. Well, of course, we don't want you to be worried. We do have a lot of investors like you who feel that Hong Kong Stock Exchange represents a new way of regulation, giving people a more stable and foreseeable market operation. In terms of regulation, in this particular market, we have a lot of international operations in the Chinese market. There are also special operations which are unique to China. For instance, some of these operations can be extremely streamlined compared with the international market. You have a lot of free services as well in the markets in China. However, the operations are quite different between the markets in China and outside. We hope that through the connecting of the markets and with more Chinese markets going into the international market, we will be able to do a lot of things in order to make this connecting easier and more which makes it easier for domestic investors to go into the international market. In addition, the Hong Kong market, as I'm trying to find the right word here. But if you have a lower volume, if you have a lower market, we are going to look into the reasons behind. But we won't be sleepless because of this. This is the market. There is reluctance to trade in the market. Then I can't force it. I won't take a lot of measures to stimulate people in trading, and I won't stop people trading. Even when they're very active, we don't have the intention, neither do we have the authority to do so. We can't play a visible hand in this market. Of course, there is a big gap of pricing. So we could see that, for instance, Shenzhen, we have the most expensive as well as the cheapest market in the world. However, the disparity gives us opportunities, which may not be seen by people at the moment, but eventually we will see these opportunities. We have a new market divisional department in order to introduce international markets to domestic investors. And we also hope that the approach of investment by Chinese mainland investors could be accommodated by our adjusted systems and mechanisms. So we will put in the right software and hardware, and when the market wants to come, then it will happen. Of course, market sentiments change dramatically in the Chinese mainland. We won't follow those sentiments, but we want to develop a market which is acceptable to all. Okay, I didn't give you any particularly useful feedback, I suppose, but that's my answer. Mike, please. Well, you have to ask yourself, why didn't you use that market? Why didn't your clients use that market? But it doesn't really matter. A lot of Chinese mainland investment is following the momentum, following the market sentiments. Some things are very rational, for instance, but we don't have a lot of fund investors, for instance. We still have a lot of retail investors. Under those circumstances, we won't be able to solve the problem if we put in some simple measures to facilitate the trading. In fact, a lot of my people are dealing with or talking to a lot of investors and intermediaries. Just now you talked about regulating the market. My suggestion is that please don't touch these junk stocks. You won't be bitten if you don't touch them, right? A lot of investors, strangely, from mainland China love those very risky stocks. Mainland investors like to see change. If you just put your money in a blue chip stock without any drastic changes, they don't like it. We have produced a document on this issue. I really want somebody to actually to show me, to put his finger down on the problem that can help us push forward the reform. What you raised was a matter of concern, is a matter of concern to us. If you have a solution, please send your answer to me. I'll give you my name card.
This is from Sukrit. Apologies if I mispronounced the name. From Deutsche Bank. It's a strategy and personnel question. Asking us to, he's saying, hello, Charles and Paul, so greetings from Sukrit. Asking you to break down the costs for Shanghai Hong Kong Stock Connect, recurring, non-recurring, in 2015, and then to give him some kind of projection or idea about additional staff and implementing strategic plans. Is more staff needed as strategic plan implementation goes forward?
Let me answer the second question first, and Rumi can, finishing up. I don't think there's a lot of non-recurring, income from Connect this year, and so whatever it is, it is. In terms of staff, yes, we will be increasing. Continue to look at adding staff in areas where staff need to be added, particularly in areas where, for example, in the commodity space, particularly in the spot commodity project that we're going to be built into China. We will be doing it through an offshore company, onshore company subsidiary, and there will be, a number of new executives that we'll be hiring. And then when, the platform get launched, then we will have additional sales and marketing and IT management, personnel. And we believe those are very manageable investment. And we're not talking about huge numbers. We're talking about, small increment over our cost base. But if you think this year is very difficult, so are there any way for you, are you prepared to cut costs? Are you going to be able to do a layoff? Are you going to be able to do something to react to a very difficult market? I just want to let people know that we will be controlling our cost. We will be looking at our expense like we always do. But our business is a very different business. We have a pretty significant fixed basis of fixed cost, and 60-some% of that cost base are staff cost. And the staff cost, we do need, these people to operate this exchange. We have higher operating leverage, which means that, when our ADT is going through the roof, a lot fall down to the bottom line. But in a difficult market, it's pretty difficult for us to move our cost line because we're not like manufacturers that we can, control the raw materials, we can control the production lines, and there's very little, we have to operate the market. Whether or not, people are trading at, 90 billion today or 120 billion or 60 billion like yesterday, we have no control over that, but the people we need to run this market is largely there. So, we may be able to delay a few things, and we may be able to, sort of optimizing some of the cost structures. But whatever we're going to do, the actual, impact on our margins and the actual impact on our P&L is going to be quite limited, by cutting cost.
Sucrit's question was actually on the cost and the profitability of Stock Connect. I think let me answer the question by saying we have some project costs. Most of the Shanghai, Hong Kong Stock Connect project costs were incurred in 13 and 14, and the CapEx and some of the capitalized people costs are being depreciated as we speak. In terms of recurring profitability for the Connect programs, I would say the best assumption is just to use the same profit margins as you do for our normal business. They shouldn't be very different from those. Thanks.
Anything else on the cost from...
Let's move away from cost.
Okay, Charles. All right, we're going to go back to another online question. This is from, I believe, London. Prakama Desai with Reuters is asking, and I'm quoting, quote, "We understand LME made an informal approach to Baltic Exchange late last year. Can you confirm that? Secondly, our sources say Baltic Exchange valuation was around 120 million US dollars. Would you agree with that number? What would the Baltic Exchange...
What was the 122 million?
I'm sorry. Our sources, Reuters sources, say Baltic Exchange valuation was around 120 million.
Wow, 120 billion?
No, million, my mistake.
Okay.
120 million US dollars. Would you agree with that number? And would you, how would you see the Baltic Exchange bringing value to LME, HKEX, and kind of value terms?
That's way ahead of ourselves here. I will not confirm, I will not deny anything. When it comes to M&A, no matter how small it is, how large it is, it's not something that we comment on. We continue to explore a variety of business opportunities, some of them involving a partnership, others involving building out new business. There might be others that are involving potential acquisition, but I'm not going to comment on any specific situations here. And please do not read that into anything. Yeah.
Very clear. Thank you. I understand Bosco from Economic Journal on the far side has a question, front row, I think.
Go ahead, sir.
Thank you, Charles. I'm Bosco from Hong Kong Economic Journal. Congratulations on the solid result first. I have a question about the credit agency Moody has just lowered down the China credit rating from the stable to the negative. Could you just share your view, your opinions to us? What's the impact of this action on both Hong Kong market and the Hong Kong Stock Exchange? As we all know that we have a closer and closer cooperation and the relationship with the China financial market. So I would like to know what is your view.
Yeah, I have not read the full report. I read some, quick summaries of it. And, so I really couldn't comment on whether or not it is something that I would personally agree. And it doesn't really matter. It's the analyst at the rating agency that is conducting a particular review and is using, as you can see in that report, a whole range of assumptions. And many assumptions you may or may not agree with, but it does not matter. Based on those assumptions, he has come up with that recommendation or a particular rating decision. And I think, any rating decision is going to have some impact. And since this is the downgrade, it will be hard to imagine that, this has any impact other than it's probably on the negative. But how negative it is depending on whether or not people actually truly understand and believe in the assumption that is made that is driving that outcome. But I think, China, has a very strong financial position, has a very strong, has very, limited to foreign borrowings. And so I think, the practicality of that result on anything is very marginal, because we're not in, it's not like there are substantial amount of outstanding debt that need to be repriced, and somehow, any changes in a rating outlook is going to substantially changing the cost nature. And China's own financial market is still largely insulated and is not responding, with those sort of rating changes outside China. So I personally think, it's clearly something that everybody is looking at it, but I am not in a position to articulate as to whether or not, this is going to have anything meaningfully impacting China. I'm really looking forward to a question that I can say something useful. I saw a lot of hands on this side. I'd like to give...延迟和压后啊，你先把问题给我。
Ask your question. The question is this going to be delayed, or because I don't know I can't really say because I don't know what your standard is. 好了。
And we'll do whoever raised their hand over there. Thank you, Charles.
I understand your stance about not talking about M&A, but I think if you can be a bit more helpful to the investment community and maybe the media, can you also talk a little bit about what's your general guideline or criteria if you are going for something, just like when you bought LME back to 2012? Thank you.
Yeah, we are pretty busy doing what we do. We do not go around and trying to shop around and trying to see who is up for sale and decide whether or not that's something that we want to buy. When things do come up, we will look at them. And we have a pretty solid portfolio of organic growth and also external growth that we actually can be solely responsible without having to pay anybody. We will be making investment into China. We're building this spot platform. We're, launching all the products. We are trying to connect with China whenever China Inc. is ready to connect. So a lot of those, we much more prefer to do things that is totally within our control. And however, if there are opportunities that present themselves, without us going around and soliciting them, that add value to what we do, we will look at them, because we wanted to build an ecosystem of commodity trading that is rooted from China's commodity, because it's the biggest consumer market and the biggest production market, and to the extent any other assets that can be complementary to that business, whether they are in additional data providers, additional index providers, additional trading possibilities that is important for us. And also from a timing perspective, it coincides, broadly speaking, with the overall strategic program. I think we will be looking at it. And, if you think whether or not we are going out for LME type of, acquisition, no, we're not. We have plenty of, unlike many other companies, I'm not suggesting the current players have run out of growth space. That's why they have to merge. We actually have a lot of things that will continue to sustain our growth into the future. But whenever opportunities arises that supplement and complement that growth, we'll be looking at it. But we're not actively looking for something just to add on to a portfolio of things that we want.
There's a lady in the third row with the gray sweater has had her hand up several times. I think she's ready with the question.
Thank you.
I'm Lin Xixing from Business TV channel. I would like to ask a question for going into 2016 for IPO. We have seen the total volume has dropped significantly, on the basis of the large base from 2015. What is your view on the drop in IPO, and what do you think is the biggest challenge for Hong Kong Exchange in 2016? Well, for IPO, we have limited control on IPO. It is different from some projects. You can build the system and people can come and trade. For IPO market, we need to have those companies who would like to come and carry out their initial public offering, and depends on their development cycle and any opportunities for them in mainland China, and what they're going to do with the financing. Are they going to are they going to further develop, overseas? Currently, we have quite a few large projects in our pipeline, and those projects come from mainland China. So for IPO, we've never really said we're going to be number 1 or number 2 in the world. This has never been our targets, because this is something that we cannot control. What we can do is that, we need to have our own standard, and the gentleman just said that if we could improve our valuation, and which will inject vitality into the market. So we haven't really ever focused on the IPO indicators. I've never really thought of it, as an important indicator. And the largest challenge for 2016, how do you define challenge or difficulty? What are the issues that if we do not solve, our revenue will come down? I haven't seen any issues of such nature. Some of the challenges that we have witnessed, actually, if we can grasp them, they will be good for us. For example, commodities are difficult at the moment for LME. On the surface, the volume is decreasing. However, this means that, this low period would give us the time to prepare us for the future growth. If the market is very hot at the moment, everyone is accumulating their commodity and waiting for the price of commodities to go up, then no one will actually be trading on the spot market going forward in the next 2 to 3 years. In China, we will see a lot of potential issues. For example, risks accumulating and not enough supply, etc. So if anyone could solve the financing issues, the warehouse issue, the credit issue, then of course, everyone will be coming to this platform to trade, which means that in the next 2 to 3 years, it is possible that we can build a large IPO system in China. And once we have built that foundation, everyone will naturally come to us. So sometimes, the most difficult period could become the best times for us. For example, when A-share was the hottest last year, a lot of my mainland friends, were telling me that we don't need Hong Kong. But then today they have realized that actually there are a lot of things that Hong Kong can do to assist. And with Hong Kong, China is a lot better, and whether they admit it or not.
Gray top. There.
Hi, Charles. Do you agree with SFC should have more influence on listing matter, or simply the listing approval should be transferred to SFC? Thank you.
Who said we're going to transfer the listing function to the SFC? Nobody, right? Great. Nobody said that. Huh?
More influence, you said.
So SFC said they want to move? They have not said that, right? Great.
Hang on, wait for the mic. Okay, go ahead.
Do you agree with SFC should have more influence on listing matters? should have more influence on listing?
SFC should have...
Because of the problematic company seems to be getting more and more nowadays. Do you think that the SFC should have more influence on listing matter? Okay.
Very important, question. If we have some companies that have questions and problems, if people think that's because the listing entrance hurdle examination is relaxed, and that's the cause of it, that's wrong. You can look at every company that today that you don't like, that you think there's a problem. You go back and look at how they were when they were applying. I would challenge anybody who can tell me that this company should not have been listed with the information known to the regulator, to the listing committee, to the listing division, to the SFC at the time, that should not have been listed, but because you didn't do your job, it's got listed and becoming a problem, and therefore we need to change. If anybody is making those conclusions, I'd like to have a challenge with you one-on-one at some point, on a stage or at home or somewhere, because that's wrong. I don't think any company that has gone bad, if you think it has gone bad, is the result of failures of our listing department, of our listing committee, of our listing regime. Having said that, am I supportive of greater SFC involvement? Absolutely. The regulator can be involved as much as they deem to be appropriate. And we are a regulator. We would love to be able to work closely with the SFC, and we continue to do so. And I think in this future efforts of continue to looking at ways to enhance and improve, we will continue to do so. And also, anytime we make a change, sometimes it's because you didn't do it right, and that's why we have to change it. It's not the case here. The case here is whatever system we have had has been with us for 15-some years now. Our market is becoming a very different place. There are many things today that we need to do it differently that calls for certain changes in the way we review them. And that's how we're going to do it. So I would not want to build the few connectors together because our system works. It's a great system, but we're going to work with our regulators to continue to improve them, make them even better.
Okay, maybe the lady in the front row, I think she's had her hand up a few times, the blue pen in the second section here.
Good afternoon. I come from TVB. We have heard rumors that the CSRC, the new chairman of CSRC, once he is in position, he will be delaying the potential project. And second, are there any beneficial policies to Hong Kong Shanghai Stock Connect? And thirdly, do you have the intention to acquire to go for M&A with the London Exchange? Well, for Hong Kong Shanghai Stock Connect, there will be certain changes in the volume, such as volume expansion, etc. This will be an upgrading for the Hong Kong Shanghai Stock Connect, and we will be doing this together with the Hong Kong Shenzhen Stock Connect. And whenever the Hong Kong Shenzhen Stock Connect is formally established, we will be releasing details of the Hong Kong Shanghai Stock Connect expansion. And for all the rumors, I don't have time to really respond to all the rumors flying around.
Weekly, thank you. Army Monthly.
If your rumor comes from very reliable sources who are with Chairman Liu, then please tell me so that I can be better informed.
Any other features in terms, you were talking about software and hardware for the market, any other features that you think need to be added to the Stock Connect in its current configuration, expansion on short selling, anything like that? What do you think could be coming? Second question, any more details on Bond Connect? Chatter has been going on, I think, for about ever since Stock Connect started, but not much has been heard beyond that. I was wondering whether last week's CIBM reform in China makes the plan for Bond Connect a little bit moot, or what do you think the role could be for Bond Connect? Thank you.
I think there are a variety of things we're going to enhance on Shanghai on the Connect program. I think we already done quite a few. I don't think in the next round we are anticipating significant changes on features like short sellings and others, because in light of the market conditions in China, those heavily and features that potentially have create selling pressures are probably going to be something that will have to wait. But we will look at inclusions of greater underlines. We will be looking at we will continue to be looking at holiday arrangement, so that at some point into the future, not anytime soon, because this has to do with the banks and others, that we wanted to find ways to solve some of the holiday issues, because if one market is open, the other is not, and there's a holiday on the other, and there's a major movement in market, we wanted to find ways over time, again, nothing in the imminent future, that find people at least for investor to be able to manage that risk exposure. On Bond Connect, I just want to make a point that we are making good progress. The fact you're not hearing about it does not mean we're not making good progress. But I'm not in a position to actually go into a lot of specifics. But the idea is pretty simple. There are two markets that we could potentially connect, and we're pursuing both. One is there is exchange-traded bond market. The Shanghai Exchange has significant a number of corporate issues now, and even though it's still a small portion vis-a-vis the banking market, it is growing very fast. And connecting that with us is very easy, because easily you can just put them into the underlying portfolio of Connect. So that's something that we will be pursuing with Shanghai Exchange. Secondly, is to build a Connect with the banking model, or with the banking OTC market. There, the reform they announced just a few days ago is actually a great opportunity. You could say that they actually opened for a lot of people to go there, and I think our concept of building a Bond Connect was never about you cannot go to China, and therefore you come here. It's all about you can't go, you don't want to go, even if they allow you to go, because the big boss will go, take a big chunk, but there are a lot of other smaller institutions, hedge funds, other investment funds and insurance companies. For them to actually open up accounts into China, creating a big clearing obligation, are not something that they wish to do. They're not doing enough. So we're really talking about that second group of people who wanted to deal with China bond, but do not have the resources or do not feel enough incentive to do it directly. And also they want to do it, quickly in a trading environment. And, so that's why we are doing something here in Hong Kong. And we probably will be a partner up with a number of other players, because this is not an area that we have traditional core competence, but we will partner with a few key players so that we can bring the parties together. Our whole point about Bond Connect is not about creating a bond trading platform where we can make a lot of money trading bonds. Bonds don't trade that well. Exchange don't make a lot of money on trading bonds. But when you have a lot of cash bond trading on your market, it's almost like a commodity market. We're not going to make a lot of money for people to trade the cash commodity spot market. It's all about building benchmarks in the cash market and then launching derivative contracts, whether interest rate, exchange rate, or credit, onto those benchmarks is really the key into the future. Yeah.
Lady, second seat in, who's had her hand up before. We're going to let her ask a question now. Apologies for the mix-up.
I'm Eileen from Modern TV. We know that on Monday there were 3 stocks that dropped dramatically, and some of them, they have dropped over 65%. And do you think, this has any enlightenment on the third board launching? Well, I'm not going to go into details with regard to the specific companies involved. But for this incident itself, first, this is a bad thing. The stock has dropped so much, and usually this is because, some serious problems have happened. If you are the investors of these companies, you will be experiencing a lot of pain at the moment. If you've come out, if you've sold, but you've still made loss. If you are still in there, and you might be stuck for a while. But this reflects that our market can wash out the problems very quickly. In domestic China market, it is unlikely that one stock could go down by 65%. You need a lot of limit up or limit downs to reach this level. So with regard to our GEM or future possible reforms, I believe this is a great driving factor for us to clear out those companies with serious problems. I'm not giving any specific comments on those companies involved, but what I'm saying is that, we will be making improvements. And coming back to the point that I made earlier, the market has 3 stages of regulating. First one is entry, second is the low investment, and third is a mandatory exiting system. If the exiting system is smooth, which means that you will not need to worry about having a low entry point. If the market, you do not solve the exiting issue, then it would be difficult for you to solve the entry problem. So we must have a matching mechanism for both entry and exiting. We need to have a good exiting mechanism which will allow you to have a strong and robust entry mechanism. If you don't have such a exiting mechanism in place, it will be difficult to have good companies coming into the market. And how do we change this? Well, again, for Hong Kong, we protect the benefits of the community. We will be soliciting opinions from everyone. And from our experience in the past, you need to do your homework well. If you don't do it well, that will have a massive impact on the market. So we will be doing this very prudently.
The reporter again, Pradima Desai, Reuters in London, asking very specifically, the plan to create a mainland spot commodity market, would that be prompt trading for physically deliverable metals? Would it need approval of the CSRC? If the contracts are physically deliverable metal, would that be a way of getting LME warehouse expertise into mainland China, a first foot in the door?
The answer is yes to all questions. It is a spot market that is physically settled. And number two, the answer to number 2 is a no. Whether or not that spot trading requires CSRC approval, the answer is no. And whether or not that will allow us to leverage the LME experience into China, the answer is yes.
Great. Like 1 or 2 more questions. Luke with ET, I think. Luke in the back, blue.
But make sure we answer Eric's question too.
Okay.
小江你好，因为
Good afternoon, Charles. We have heard a lot of questions with regard to the third board, and we have also heard in the budget that there will be a public budget announced soon. So in the consultation, you will mention a lot of issues for the third board. Will there be a lot of, information relating to the third board or the entry or the exit mechanism? Well, this consultation, if we were to carry it out, we will be carrying it out together with SFC and, of course, under their guidance. So far, we don't have the mandate yet to talk about, when we'll be carrying out this consultation and what information or what content is involved. But according to the best of my knowledge, it is unnecessary to connect all the third board or entry or exit mechanism. We don't need to wait for everything to be ready. It is not necessary to separate them, when we are going to do this consultation, I think this is something that we need to work together with the SFC under their guidance again. And in the SFC's report, they have said specifically, this will be done in the near future. Lauren, what was their specific timing? Was they said soon? Okay, they used the word soon.
Is soon. Okay.
Okay, next question and last question is running out of time. Eric with ET in the second row, white shirt, dark jacket. Thank you.
Hi, Charles. Just a quick follow-up on the listing regulation issue. I think you talked more than about one time your philosophy about getting the companies, problematic companies out of the market, not just about to higher the threshold and make it difficult to enter the market. Could you elaborate a bit on that? Would it be about speeding up the process of the prolonged suspension companies the listing process? Or
okay, I think you're just trying to get me in trouble for. I have already said enough. You probably think I have not said enough that get me in trouble. So you want me to say more so that there's a greater chance for me to get into trouble. So let me just make sure people understand what I'm saying. I'm not suggesting. I have no authority, and I'm not in a position, and it is not my job to suggest whether or not today our market need to enter into, company delisting process, changing the regime. It is up to the regulator working together with the regulatory system, with the market together to figure out what to do. I'm trying to say from a logical, analytical perspective, I want people to understand that why we are trying to, what are we trying to achieve in trying to reform our current regime. And the point I'm trying to make is that some of us, whenever we criticize our system, we just simply good companies. Some good companies are blocked from coming in. Are there ways to bring them in? I'm suggesting, because we all would like to do that. But meanwhile, we also have other friends who are saying every time you lower the hurdle, you have a lot of bad companies coming in. And then still others are saying that even if you can block them and they become bad, what do you do about them? So I'm just trying to build a logical relationship, analytical relationship between this few. The point I'm really making is we would like to get more great companies to coming in, but unless we're able to fix the exit challenges, it will be very difficult for us to find anything to do to bring better companies, because when we say better companies, if they are already qualified, they're already in. We don't need to do anything. We're really talking about whether or not we want to find ways to lower the hurdle for good companies to come. I'm only suggesting that this is not going to work unless you're able to make sure that if they're wrong and turn out to be a bad company, that the system does not allow them to stay there forever. And if you do not change that, there's no way you will be able to change the entrance. That's all. I'm not suggesting it's time to do it. I'm not suggesting we should do it. I have no authority and to suggest that that's something that we should do. It's our job to provide a perspective, an analytical background, and share the thoughts. And hopefully people actually say, we disagree, you can do it. You don't have to do that, you could do it. So anybody have brilliant ideas? Any idea that we haven't talked about it, let us know, let the regulator know, because we are all here together wanting to improve our market.
Okay, Charles, thank you. It's now 6 o'clock, so it's very late. Thank you all for coming, and see you next time.
Thank you very much. Yeah.